This market can turn on a dime. In 3 or 4 days, we could give back this entire rally and people will be like, oh my gosh, how did I lose all that money I was up, right? So the market is on a turning point. And if people aren't ready or positioned with orders standing to get them out, if things roll over, they're going to pay pretty dearly for it.
Here at Liberty and Finance, we're licensed brokers with Miles Franklin. We are standing by the inventory, ready to make sure you get what you need, even into the wee hours of night and on weekends, because preparedness doesn't stop. Call us 1-888-81-LIBERTY. That's 1-888-815-4237.
Hey everyone, this is Elijah K. Johnson with Liberty and Finance. And back with us today is our good friend Chris Vermeulen from thetechnicaltraders.com. Chris, thank you so much for joining us today.
Hey, thanks for having me, Elijah.
All right. Well, I did want to get your take on the market right now, the stock market, as we're seeing this better than expected, much better than expected jobs report, double the numbers that analysts were expecting. We're not seeing too much reaction actually from the stock market, but we have been seeing in the last couple of weeks a rebound. Where are we headed from here in your perspective?
Yeah, I mean, I think those numbers were pretty shocking to a lot of people. Surprisingly, the stock market sold off, but that is, it's not surprising. Typically, it's buy the rumor, sell the news. So maybe the market has been factoring and there's growth behind the scenes. It's just like when we see with any company that comes out with earnings, they meet or beat expectations, and then the price sells off 5 or 8% on the good news. So obviously, this has been baked into the cake because the market is pulling back on the good news. We've been in a strong uptrend for a little while. If I just share my screen here, you can see the SP 500. This is the daily chart, and really we kind of broke above this blue. This is the 50-day moving average a couple of weeks ago, and we had a buy signal in the market. We've been in about 7 different positions. We've locked in money on 4 of them. And, this market's to the upside. We've got money moving back into growth stocks. We've been into a bunch of growth sectors. And, right now, this move, we've got to see if there's going to be follow through with the stock market. I like to look at the SP 500 as kind of the barometer for the overall stock market and investor sentiment. And if we were to just kind of draw a line across this chart from this high that we saw back here in June, it was a big consolidation back here in late April, early May, and then multiple lows earlier this year. So this is a very pivotal point in the stock market. Is it going to break higher and we're going to see another multi-week rally? Or are we going to see this market roll over and sell off? And that's the big question. We are positioned in some growth stocks, expecting this market to hopefully go higher. But we got to be aware that this market could roll over very quickly. It comes down to managing risk at this point, because if the stock market rolls over, it is going to put pressure on most likely precious metals. And we saw this with today's news, specifically like at 8:30 when that news hit this morning, the jobs, we saw the stock market sell off about 1.5% instantly, and the US dollar rallied. And this has been kind of what's been happening all year. Is the dollar's been going up, stock market's been going down. And this kind of really just confirms that when money's moving out of the stock market, it seems to move into everything that benefits the US dollar index. So if the stock market rolls over here, the US dollar is going to go higher. It's going to put some pressure on metals. And we just need to see which way things are going to break. And we're just kind of in limbo waiting right now.
If we do look at the overall trend, though, it has been down from the beginning of the year. Do you think this is possible that we could be seeing a reversal, or is this just a bear market rally that we've been seeing the last couple of weeks?
It's very possible that it could be a reversal. We are starting to get signs that maybe this major trend is starting to shift gears, and you can't rule anything out with the market. It's going to do what it's going to do. So there's no point in fighting the trend. And as you know, I'm pure technical analyst. I follow price. I don't really care what the fundamentals or economic data is. Price tells us more likely where it's going to go next. And we need price to go in our favor. So at this point, I feel like the market could actually rally for a couple more months. I don't know if it would go to all-time highs. I do think we could enter what I think would be like a complacency rally. So if I was to zoom out on the stock market and draw what I think could unfold here. If we break to the upside eventually here, I think it could carry over, and then eventually it could roll over and start something much bigger of a correction. And, if we take a look at a diagram that I've created here, which is kind of telling us where the investors' kind of sentiment is, this is the complacency rally I feel like the stock market is entering. When you look at the overall massive trends, big cycles at play, things coming together, I feel like we will be entering a bear market for stocks. But first, we're going to have this complacency rally. And during this phase, believe it or not, is actually when we could see precious metals and miners do fairly well for a few months. So stock market could rally or trade sideways for a few months, and we could see precious metals do very well. But if the market does roll over, the stock market, like the SP 500, and starts to move lower, the dollar is going higher, the selling pressure is going to pull pretty much every asset down. And there won't be really a defensive play other than to move to cash, play the US dollar, or potentially an inverse ETF to profit from falling prices in whatever asset that's is of interest at that time.
And looking at how this could all impact the precious metal prices, what are you seeing technically there?
Yeah, if we take a look at gold, the daily chart here, gold has been in this really strong sideways consolidation for a while. There's a very significant pivot low here around 1675. This level was resistance, became major support, another support level, and another one here. And then more recently, this one that we tagged it, we've had this knee-jerk reaction bounce off it. That kind of reaction bounce almost came off, I think, overseas. They were doing a rate hike. ECB came out, which kind of created a bit of a pop there. I think gold is going to be in a very big range for a while. I think there's potential. If the stock market goes sideways or higher for a few months, I think we can see precious metals and miners kind of work themselves higher for a little while. If we enter a bear market, I think precious metals and miners will eventually probably come back down and test these levels. I kind of feel like we're going to see the metals hold up fairly well in a very big range here, potentially for a year or longer before we actually break out and start the next run. And to me, commodities have entered a super cycle, but within a 10-year super cycle to the upside, we can have multi-year pauses because it's a huge, huge cycle. And if we look at the quarterly chart of gold, you can see here, we put in a multi-year base. We started a super cycle in 2019, and now we're trading sideways. I think it could continue to trade here for a few more bars. Keep in mind, each bar is 4 months. So 4 bars is very easy. Quickly, a year passes, and then we could see this break to the upside. And it is pointing to, 2,600, 25 to 2,700 upside target for gold. Using Fibonacci extension, we can see the upside target here is $2,700. So I think the story for precious metals is very bullish. I just don't think it's going to happen anytime soon. It's going to take the rest of this year, probably some of next year, for things to unfold. And the longer something trades sideways, the more powerful the breakout can be to the upside, or whichever way it breaks. So there's nothing wrong with gold channeling sideways for another 8, 12, 14, 16 months from now. It's a very strong pattern.
Now, what is the reason you're looking for gold to hold that 1680 level on the downside?
Simply because it's a technical level on the chart, not only from the recent price action in the past couple of years, but it was also right through the heart of these these candles that we saw in 2011, 2012. And I also think gold is going to act as a defensive play. I think there's going to be all kinds of probably crypto and currency issues and all these things, and war potentially continue to unfold, maybe with Taiwan. Who knows what's going to happen? But I feel like gold is kind of the global, somewhat the hard asset of choice. Silver's not quite the same. Gold is the one that comes to mind. It should hold up the best. Typically, it has held up the best in history, so I don't know why it wouldn't do it again. So that's my reasoning, is more so just technical standpoint, and the global economy sees it as that kind of place to put some money when there's war happening, potentially more wars and all that, and currency crisis. So,
and your take on what silver is doing right now?
Sure. Let's take a look at the quarterly chart real quick. We'll get a super high level view. So silver is pulling back. Silver now, typically has a much noisier chart. Silver's all over the place, but the pattern is still very bullish. So if we were to just look at it from this standpoint, we saw a very big rally back here in 2019, and now it's been flagging down. This is known as a bull flag pattern, which is a very strong pattern. It should resolve to the upside and bring us back up to $36, $40 per ounce when this does resolve. I do think it's going to take the same amount of time as gold to probably make its move, unless there's some big short squeeze that everybody's been waiting for about 30 years to happen, if that unfolds. But, the silver chart is still very strong. When we look at it from a shorter standpoint, like the daily chart, you get a real good view of how noisy this chart really is. If you look at the price just chopping around, huge pops and drops around the moving averages, it's not, it's not something that's nice and smooth and trending. When it's trending, it is a powerful, powerful asset, but it trends very little, only for a few bars, monthly bars, and then usually those trends are over. So right now, if we were to look at this in comparison to where gold was, I drew that horizontal line for gold. Silver has a way of piercing and breaking through all kinds of levels, but silver has broken down what would be the equivalent line on gold. So we're definitely breaking down on silver. It's flagging down, and it has a lot more work to do in terms of an uptrend, percentage-wise moves before it really is comparable to gold. But again, similar type of price action should resolve to the upside. But right now it's in a downtrend. It's a good spot to accumulate, obviously, for investing standpoint. But from a trader standpoint, the trend is down, is more likely to go sideways or lower than it is to go higher at this point.
You mentioned it's more likely, to go sideways or lower right now. What is the support on the downside right now? Because I know previously the support had been around that $21, $22 level, which was obviously broken.
Yeah, so there's a really clear level. This blue line here, it's somewhere around the $18, $19 level, which is where we found support recently. It's also a major resistance area where big sellers stepped in. Every time it tagged this level, kind of got rejected until finally it took off and had that powerful trend. And silver's got these very strong but quick trends, and then it just goes really, really noisy for a long time. So as you can see, same with the downside. It'll be really noisy and then a very strong trend. So it is a tougher asset to trade. It moves a lot more like kind of natural gas, where it's all over the place and then boom, it just takes off or drops. So this 18 level is going to be a very critical support level. I wouldn't be surprised, though, if it comes back down and tests that potentially, maybe even pokes to some nominal new lows. There's going to be a big support level kind of in this range right across here, just a little bit below 18, down to around the 1750 mark. That whole blue zone will act as a support zone for silver to try and bounce bottom. If it starts getting below that, then a lot of damage has been done, and it's really lost all of its momentum to the upside.
Now, I know a lot of people in our space are interested in also the mining sector. Your perspective on those right now, if we look at some of the ETFs, it seems like they have been falling along with the metals right now.
Yeah, they have. They've been really underperforming, which is not a good sign for gold. Typically, you see gold miners take off first. And then usually gold follows. This year hasn't been that case, or recently. In fact, you look at GDX, which is the large cap gold miners, and it's struggling to get above this pink line, which is the 20-day moving average. Now, gold and silver, they've all rallied up to their 50-day. So the fact that the leverage plays on precious metals are not performing, that's telling us that there's no speculative interest in this sector right now. Usually you see money pile into the speculative, the highly leveraged, kind of high beta plays based around gold. If they think gold's going higher, they move into the gold miners. So we're not seeing that. So we're definitely, this sector doesn't have a whole lot of interest. It's just people trying to pick a bottom at this point, and not enough to spark a rally in the miners or anything so far. So, they're out of favor right now. There will be a time when they do turn around and they'll become a market leader. Whatever is out of favor typically becomes a market leader in the future, and it just kind of goes back and forth. It just need to wait for that time to come, which it could start to put in a bottom. I mean, if we're starting this complacency rally, we might start to see this come to life. But again, we're not seeing any signs of real life in the miner space yet.
Which I guess on a contrarian view, that's the best possible situation is when we're seeing nobody looking at a particular sector. That might be the time to start accumulating.
For sure. There's a lot of different investment and trading strategies. I'm not, while I'm a contrarian trader, I don't pick bottoms. I don't just buy things when they're at a low. So that is a strategy a lot of people do. My strategy is to follow the trend. Right now, the trend is down. So if I was to do anything, I'd be looking to play the downside. When it turns up and becomes a market leader, I'd be looking to get in and ride the trend higher that's already in place. But for sure, as a contrarian trader, this is probably a good point to add to a position. But that's not my style of trading.
What are some of the signs of trend reversal that you'll be looking for?
Yeah, so if we were to look at the GDX here, and I'll just zoom in a little bit more, we'd be looking for typically what I want to see are higher highs and higher lows. The definition of an uptrend is higher highs and higher lows. And if we were to look at this chart, we could draw a line right across this high here. We've at this point it looks like we've got a higher low. We've got a low, and then we've put in a new low. But we do obviously need it to break above this previous high. So if we could break above this high around 27, that would give us a higher low. It would also now give us a set of higher highs. And that is kind of a new uptrend. So there's potential here for gold miners to kind of kick into a short-term uptrend, potentially next week if it was to turn around. So that's in a nutshell what I'm looking for. And I like to follow trends. Typically, we're still below the 50-day moving average, which is this blue line. And if you're underneath it, the bias is generally down. So we could very easily see what happened over here happen again now. The market rallies up. You get a little rally, a pullback, a higher high, a pullback, a higher high. So we did have a definition of a short-term uptrend of higher highs and higher lows. Same as what we're getting now. But again, it resolved to the downside because the longer-term trend is constantly pulling down. From a long-term perspective, investment firms are unloading their shares. Any bounce, they start to sell shares into, and it creates that next downward leg. So we're still in that phase that this could easily move up a little bit over the next week or so, but the overall trend could get sold into, and it might not go a whole lot higher. We need it to really blast off and probably break above 30 or potentially get above like 33. So there's a lot of upside potential just to get back into what I would consider a very strong uptrend, where the momentum has fully shifted and now pullbacks or pauses are being bought by institutions. So a lot of work has to be done. There's a lot of upside just to get to a new trend before I'd even really be interested in it.
Now, one indicator that people look at for what is maybe going to happen in the gold sector is going to be the dollar. So we've seen extreme dollar strength recently. Your perspective on that and where we could be headed going forward? Sure.
Yeah, the dollar has been on a tear, and we saw it pop really strong early with the economic data out this morning, and we're seeing it move up. Now, overall, the dollar, I mean, nothing out of the norm here. It's in a strong uptrend. Price right now has pulled back into the 50-day moving average. It looks like it's trying to put in a bottom, very similar to what it did right over here. And as you can see, it's just been a stair-stepping price action. You get a rally, a pause, a rally, a pause, a rally, a pause. It's just a series of bull flags, rallies and pullbacks, series of higher lows, higher highs, and right now it's down at a support zone. And I think it's going to continue to go higher. And I think that's going to keep kind of a lid on precious metals to some extent going forward. I do think there's quite a bit of upside potential still with the dollar. And that is going to definitely hold, I think, metals down in some regard.
So it sounds like across the board, we're really looking for a trend shift before we're going to see higher prices for the precious metal sector.
Yeah. I think it's going to take probably several weeks or several months, minimum several weeks to kick into a technical uptrend where I'd be interested in getting involved in it. Until then, it's kind of like just a bear market bounce. It's just a rally that's going to get sold into. And I don't really want to take any part of that until it's proven me wrong and it's in an uptrend. And then I'll buy the first pause or pullback.
And last market I'd like to cover today is the cryptocurrencies. If we could look at Bitcoin, I know it's had quite a downturn, as we've seen a downturn in the precious metals and the stock market. It seems like Bitcoin has been hit the most recently, but we have seen a bit of a rally there. Where are you looking for Bitcoin to head from here?
Yeah, it's a huge sell-off from much higher levels, put in a huge bear flag, and really all the way down, it just keeps making a series of sell-offs, consolidation, sell-off, consolidation. Right now, to me, it's at the point here where if it's going to continue to go lower, it's most likely going to go lower. I think the top might have been put in here. I think we could go down to 16,000 or 11,000 as the next downside target for Bitcoin. So I'm not very bullish on it at all, simply because it's making that series of lower highs, lower lows. Long term, the moving averages are all moving lower. And we really broke down from a very big kind of topping phase. When you draw a line across this chart, there were so many businesses and platforms built and developed while Bitcoin was above this level. And now we've broken down through that. And a lot of people are struggling where everybody's underwater. So it could turn into something where it falls out of favor for a very long time, has a long tail. A good example of this would be probably like the MJ ETF, where eventually it has a huge spike and then it just kind of has this long tail and it feels like it never ends. It just keeps going down and down. That could be the scenario with cryptos, which is not what anybody wants to hear. Everybody will call me out for it, but that's kind of what the setup is. The whole psychology of everybody getting in during the topping phase. Now everybody is pretty much at a loss. And it's just going to be a steady string of people selling their positions, just giving up. Every day there'll be a new batch of people saying, I'm done with it. I'm just going to sell my Bitcoin. And we see that happen with any asset that's had that bubble phase that got burst, and it's burst everyone's dreams. And it's just they fall off one by one for months and years. And it keeps this steady selling pressure on the asset. So that's my bearish take on Bitcoin at this point.
Well, it sounds like, a lot of people are bearish right now in the markets, and it seems like we do need a trend reversal before we see any exciting movements up towards the upside. What would be your last thoughts for our viewers looking forward and how they should play these markets? That it's kind of tricky right now in the markets right now. How should they play them?
Yeah, I think depending on your outlook on how active of a trader or how passive of an investor you are, it's going to take a totally different stance. But we've been in cash since the beginning of this year from an investor standpoint. This is, to me, everything is high valued. It was, now it's reevaluated quite a bit, but I still think there's potentially a lot more downside to go. So from an investor standpoint, it's really tough to be dumping new money in here from my perspective. I'd much rather get in a little later at a higher price when the new bull market is confirmed and we see real money flowing into the stock market. So the sidelines is a great place. And at this point, it's been the US dollar pretty much all year has been one of the most consistent, slowest moving kind of conservative assets to be in. As a short-term trader, I mean, we're back into growth stocks. We've been in for about 2 weeks, and we are protected for the downside. We're in the money with all of our positions. We've got stops that are break even or our first price targets. So it doesn't matter what the markets do here, but people need to be aware that this market could pop and rally very quickly. Growth stocks are going to be, I think, the biggest movers, but it could reverse and roll over. So people just need to have their finger on the trigger, have their position management in play. Where's their stop? Have they pulled any profits off yet? They need to have those things figured out because this market can turn on a dime. In 3 or 4 days, we could give back this entire rally and people will be like, oh my gosh, how did I lose all that money I was up, right? So the market is on a turning point. And if people aren't ready or positioned with orders standing to get them out, if things roll over, they're going to pay pretty dearly for it.
And where can our viewers find you online?
Sure, they can go to thetechnicaltraders.com. And then every morning I go through a video kind of like this, but much zoomed in, a lot more near-term price action. And then, of course, any ETF trade investment that I do, I share with subscribers, and we all trade those together. So
fantastic. Well, we'll put a link in the description of this video to thetechnicaltraders.com. Everyone watching should check it out, see what is over there. And Chris, once again, thank you so much for your time and insights today.
Thanks for having me. Take care.
Miles Franklin Precious Metals is one of America's oldest and most trusted bullion dealers. Miles Franklin is A+ rated and accredited by the Better Business Bureau, licensed and bonded, and has 0 complaints ever registered. Here at Liberty and Finance, we are licensed brokers with Miles Franklin. To order, simply call us, discuss your needs, and we will let you know our live inventory, prices, and availability, and lock in your order over the phone. Once your order is locked, the price is held for you regardless of market fluctuations, and the metals are reserved for you awaiting your settled payment. Within 1 business day of ordering, you will receive an email invoice detailing the order and payment instructions. Miles Franklin accepts payments by bank wire, ACH or electronic check, money order, check mailed priority mail, and cryptocurrency. The fastest forms of payment are bank wire and cryptocurrency. Upon settled payment, metals will ship out within 3 to 5 business days. You will receive tracking information via email. Domestic shipping charges are $15 for any order under 500 ounces of silver or 10 ounces of gold. For orders larger than that, domestic shipping is free. The package will be double boxed, fully insured, and labeled discreetly, with no indication of the contents inside. For your privacy, the name Miles Franklin will not even be on the package. To talk to myself, Elijah, my brother Kaiser, or my father Dunnigan, call 1-888-81-LIBERTY. That's 1-888-815-4237.